talk about AI and RPA in the finance function today, we're not just talking about automation for the sake of efficiency anymore. We're talking about enabling a smarter, faster, and more adaptive finance organization. Hyper-automation is front and center. We are seeing organizations move beyond basic automation to streamlining entire end-to-end processes, from procure to pay, to record to report. It's about orchestrating bots, AI, and humans to work in sync. The goal here is not just to reduce manual work, but to accelerate outcomes and improve decision cycles. AI is enhancing how finance partners with the business. We're now using machine learning to support rolling forecasts, scenario modeling, and real-time insights. This gives finance the ability not to just act as a control function, but as a true strategic partner, helping business leaders make faster, data-backed decisions. Self-driving finance is becoming a reality. We are seeing AI models being trained on historical transactions to automatically manage things like cash application, expense validation, or reconciliation. The system learns, adapts, and improves with minimal human intervention. That's a game changer for scalability. Natural language and generative AI are making finance more accessible. Today, we can ask questions like, what's driving the variance in OPEX this month? And get a coherent data-backed answer in seconds. This changes how finance teams interact with data. It lowers the barrier and increases speed to insight. Risk and compliance are moving towards real-time. AI is now helping us monitor transactions continuously, not just periodically. It flags anomalies, potential fraud, and control breaches as they happen. This gives CFOs a lot more confidence in the integrity of their numbers. The role of finance talent is evolving. With AI and RPA taking on the voluminous task, finance teams are shifting towards high-value work, storytelling with data, strategic advisory, and cross-functional collaboration. So it's no longer just about having accountants and analysts. You need people who can bridge finance, tech, and the business. AI and RPA are not just technologies, they're enablers of transformation. In the finance function, they fundamentally change how we operate and how we contribute to the broader business. Firstly, they improve speed and accuracy. With RPA handling repetitive tasks like reconciliation, journal entries, and invoice processing, we reduce human error and dramatically cut processing times. What used to take hours or days can now be done in minutes with greater consistency. Second, they free up capacity for higher value work. When automation takes care of the routine, finance professionals can focus on insight generation, business partnering, and driving performance. It facilitates the shift in the role of finance from a back office function to a frontline enabler of growth. Thirdly, AI brings intelligence to our data. With machine learning and predictive analytics, we can move from hindsight to foresight. That means smarter forecasting, faster variance analysis, and better strategic planning, all in real time. This enables faster, more confident decision-making across the business. Fourth, they support real-time control and compliance. AI is helping us monitor risks continuously, not just at month-end, whether it's detecting fraud, spotting policy breaches, or ensuring data integrity. We're moving towards an always-on governance. And finally, they scale with the business. As organizations grow, the volume and complexity of financial data increases. RPA and AI scale without a linear increase in headcount. That's critical for keeping costs down while staying agile. So ultimately, the benefit is twofold. The finance function becomes a more efficient and more strategic, and the organization gains a smarter, faster, and more resilient team to support decision-making and growth. Implementing AI and RPA in finance isn't just about deploying tools. It's about rethinking how finance operates and delivers value. Based on my experience leading these transformations, there are a few critical strategies that consistently drive success. Start with process clarity, not just technology. Before you automate, you need to understand and optimize. Map out your end-to-end finance processes. Identify where the pain points are, where the delays happen, and where the value lies. You don't want to automate inefficiency. Focus on quick wins that build confidence. In the early stages, target use cases with high volume and low complexity, like invoice processing or bank reconciliations. This delivers tangible value quickly, build momentum, and help secure buy-in from stakeholders. Embed AI and RPA into broader transformation, not as standalone projects. Successful adoption happens when automation is integrated into your finance operating model. That means aligning it with your reporting cycles, governance structures, and talent strategy. It is not just about tools, it's about change management. Invest in upskilling the team. One of the biggest enablers is your people. Equip your finance team with digital and data literacy. Help them understand the why behind the automation and involve them in designing and improving the solutions. That sense of ownership is key. Ensure strong data foundations. AI is only as good as the data it learns from. Clean, structured, well-governed data is critical, especially if you're building models for forecasting, anomaly detection, or scenario planning. Don't underestimate the data readiness piece. Establish a cross-functional governance model. Bring finance, IT, risk, and operations to the table early. Define roles clearly, especially around data privacy, model explainability, and exception handling. You want to ensure that what you automate is not just fast, but also auditable and trusted. Ultimately, success comes down to treating this as a transformation, not just an automation exercise. When you combine the right tools with clear governance, empowered people, and a business-aligned roadmap, the impact on finance can be both deep and lasting. Starting the AI and RPA journey in finance requires more than just switching on a few bots or models. It's a strategic shift, and the early steps can make or break your long-term success. First, get executive sponsorship and clarity of purpose. You need alignment at the top. Is the goal to reduce cost, improve speed, or enhance accuracy? Or reposition finance as a strategic business partner? One program I worked in Southeast Asia succeeded because the CFO and COO were aligned on a very clear ambition to move from monthly reporting to near real-time decision support. Second, assess process readiness. Not every process is ready for automation or AI. Start by identifying high-impact, rule-based and repetitive processes like AP invoice matching, intercompany reconciliations, or cash forecasting. In one case, we used simple automation scorecard to assess processes across the finance function and found that nearly 40% of tasks in transactional finance were ripe for RPA. Third, ensure data maturity. AI thrives on clean, structured, and accessible data. If your data is siloed, inconsistent, or poorly classified, you'll struggle to extract value. In a global energy client I advised, we spent the first 3 months just improving data standardization across ERPs, and that laid the groundwork for successful predictive cash flow modeling later on. Fourth, involve finance early, not just IT. This is a key lesson. The people who live and breathe the processes must be part of the design. When we automated expense auditing for a professional services firm, we embedded finance staff in the automation team. That ensured the solution reflected business logic, not just technical possibilities. Finally, start small, but scale with intent. Run a pilot, prove the value, then scale systematically. I always recommend setting up a center of excellence or automation playbook early, so you have governance, standards, and lessons learned in place for future rollouts. So if you're just getting started, define your why, assess your process and data, co-design with finance, and deliver a pilot that builds credibility. Get those foundations right, and you'll unlock the exponential value as you scale.